And yes, first half of 2022. My target is this first crash. It's only the first crash of the bigger crash over a couple years. Will probably bottom up around July, mid-July. So we're in that first crash.
So this first wave has begun now.
The first wave has begun. I think there's now not a big chance we'll see another slight new high. I think stocks are going down and you need to sell on weakness because this is not going to be another correction, okay? People are used to it the last 30 years. Up, correction. No, this is the beginning of a long-term bear market. Bear market rallies are the strongest rallies because when something finally peaks, people don't believe it at first. So it goes down and then people buy the dips because they've been taught to do that the whole downturn. So the rallies are strong, but at some point these rallies are going to be disappointing. I think this will be it. We've gone down, we'll have a rally here, and if we go down to new lows in the next month or so, which I expect them to say July, people are going to finally say, uh-oh, something's wrong. Something's wrong that we may have really seen a peak in stocks. And I'm saying January 4th and the S&P 500 was the peak, and major markets around the world have been peaking for a whole year from February 2021 to recently. So if a normal peak and correction, everything goes down. No, you don't see markets peak one after the next unless it's a long-term top. It's the digitization, cryptocurrencies are the digitization of all financial assets. Is that a big deal or not? So that's what it is.
Well, that's Bitcoin DeFi at large, perhaps. Is that DeFi or is that Bitcoin?
No, it's DeFi, but Bitcoin, I see, when it grows and gets more acceptance, could be the standard. That everybody's talking to this conference about gold coming back. No, gold will never be the standard. It cannot keep up with the global economy. We're in a digital economy now, and Bitcoin could become the new standard for the digital economy in the future, replacing gold in that function. So I think Bitcoin, and I've tracked this versus the dot-coms. I compare the cryptos to the dot-coms in the late 90s. It wasn't just a bubble in tech stocks, it was the dot-coms, Amazon, okay? Amazon was a nothing burger and became the greatest retail in history. So this is going to crash, and I think Bitcoin could go down to 3,000 to 7,000 and then go to 500,000 to 1 million in the next global boom. So that will be the buy of a lifetime, but I wouldn't touch it with a 10-foot pole, even down 50%, 60% here.
All right, I want to break that down a little bit. So Bitcoin goes down to around 3,000.
3,000 to 7,000, yeah.
In the next
2 years.
2 years.
In the global crash,
where
all financial assets, and Bitcoin is a new financial asset. It's like the dot-com.
But ultimately, you see Bitcoin going to $500,000.
$500,000 to $1 million.
By 2037?
Yeah, and you know what? That would be enough for it to overtake gold as a global standard for money.
When you say global standard, do you see fiat currency being pegged to a Bitcoin standard? What do you mean by that?
It could be. I mean, you have to peg to something. I mean, here's the thing. This crash, after the greatest bubble in history, when everybody took off the shackles, is going to show that you can't just print money and grow, okay? And everybody's done it. U.S. is not the worst player here. Europe and Japan are worse. When this crashes, it's going to say, we need a new standard. We need something real, and we need something for the digital realm. Gold is not that. I think gold will grow to 3,000 to 5,000 in the next boom because Indians love gold. They like it as jewelry. Indians wear jewelry in places we can't even imagine. Okay. They wear more jewelry compared to their income than anybody I've met in the world.
So Indians love gold, but the globe is going to love Bitcoin long term.
Bitcoin is going to be the new digital standard, I think, for money. And that's the standard. So other things, crypto, are innovations in finance. But I think Bitcoin becomes the global standard. It's not there yet. It's not big enough. It's not widely accepted. And I think it'll crash the most. I think Bitcoin, like I said, 4,000 to 7,000 from 69. That'll crash more than stocks. That's what I would. If we have this crash, I'm predicting in the next 2 years, the number one thing I'd buy would be Bitcoin or Ethereum coming out of it.
And
that's
Ethereum.
The next new wave, like the dot-coms, like Amazon were in the 2000-2002 crash.
Okay.
You know, Amazon went from 6 to 136 in 2 years and back to $6. That would have been the buy of your lifetime back in 2002. Things are going up and up and up. People need to see something's going wrong to make them at least think twice about high valuations. We've never seen real estate that's overvalued, way more, or stocks, even almost like 1929, but real estate is the most overvalued in history everywhere. You need something to say something's wrong to get people to think, so it's a trigger for this collapse. It will not be the cause of this collapse in financial assets. The millennials are going to kiss the ground when this happens, what I'm saying, because real estate will go back down to 2008. So we're in that first crash.
So this first wave has
Yes,
begun now.
the first wave has begun. I think there's now not a big chance we'll see another slight new high. I think stocks are going down and you need to sell on weakness because this is not going to be another correction, okay? People are used to it, the last 30 years, up, correction. No, this is the beginning of a long-term bear market. You can't go wrong buying real estate, own real estate, and real estate goes down. Now, last time, 34%. Even the Great Depression, 26%. This is the biggest decline. This will be 40 to 50% real estate. We've never seen that before. That'll be a shock. Once you get a bubble, it has to deflate, and bubbles never deflate slowly. Everybody says we can have a soft landing. There is no soft landing anywhere in history to a major bubble, but it can be deferred a bit and then come down later. So I will not be happy and say people invest again until I see this bubble deflate. And I have my targets in stocks, in real estate, and I have all my targets. If we get to these targets in the next few years, I'll say you can invest for the long term again. Right now, if you are invested in financial assets, you are going to lose a lot of money, I think, in the next 2 years. I think the S&P 500 is going to go down 86%. That's
right.
670. It's been up to almost like 4,800 at the top, okay? Real estate down 40 to 50%. Last time it was 34%. This is what hits people the most. When their home goes down in value and they're underwater in their own home and can't even borrow against their own equity. So that's my focus. And commodities go down even lower, and gold goes to about 900 to 1,000 in the crash and then zooms in the next book.
And when all of those low targets are met, that's when you're saying it's safe to jump back
Yes.
into the water.
Only when things get back to reality, which they are nowhere near. So everybody thinks, well, the Fed keeps doing this. No, we're in a bubble that's already so extended. There's nothing the Fed can do except extend this a little longer. The only way to get back to normal is to have a crash. There's no other way to get there.